Hi there, Serial Trader here. We're going to have a look at the major US indices and starting off with SPX. So there's a couple of ways I'm looking at this. Uh, First, I'm thinking this is maybe just a fourth wave and we still have at least one more fifth wave up to come before we potentially finish. And let me get to this larger time frame chart. Before we potentially finish something like this, right? And going off of the March 2020 low, the way I have it labeled here, we got this initial impulse wave up into our September 2020 high. I think this is a good wave 2 correction into the October low there. And then perhaps this is just wave 3 that we just finished there on September 2nd, 2021. And now maybe we just did a wave 4, or potentially we're working on the wave 4 if it's going to develop into a more complex pattern, right? And if that's the case, then we have not made the absolute top yet, and there's still going to be one more impulse wave up to go to finish this overall sequence off that March 2020 low. And why I kind of like this scenario is, okay, we got this initial move up. Now, this correction in both its size and magnitude, there is nothing in this section where I have wave 3 labeled that matches up at all with that as far as either time or price, okay? Whereas this, what we just did, is getting closer to being more comparable in both time and price. Now, it's not quite there. It might be close to it in price, but we need to chew up a little more time to get more balance. Not that we have to, but just for it to have a more textbook look to it, right? So given that, I mean, I have trouble saying, for instance, this is 1, 2, and this would be like 3, 4, 5 to finish the whole thing. Because this little consolidation area here, it just doesn't match up well with that. And if anything, wave 4 is typically bigger than wave 2 as far as time consumed, typically, right? Not to say that this can't be, if I drag this, how would I work it? Okay. Not to say that this couldn't be the case, something like this, however you want to label it. And, we're about to do the big one and have a huge crash. This is possible, but it just doesn't look right. And it has me less enthusiastic about that. Also, let's just get out of this larger time frame. So if we go over here, so far, what do we have? Well, we have 3 waves down off the top. So we could easily just call this ABC down for 4, and we're starting our 5th wave up, right? Now, that could also just be ABC down for an initial wave W. And let me get my labeling tool here. So yeah, ABC down for initial W. Then we do an ABC up for an X, and then one more ABC down for a Y for a more complex wave 4. That is certainly possible. But no need to go there yet until we have more price action to look at, right? Okay, but there is also still that, the super bear count, and let me just get rid of that. In fact, we'll just start blank here again. There is still the super bear count possibility as well. And that would be where we have something more like this. Hang on there. And that's where we have this initial 1, 2. And then we're working, the 3, 4, 5 down for some sort of initial impulse wave down. And within that 1, 2, hang on there. Within that 1, 2, we have another 1, 2, 3, 4, 5 of the 3. Drop this degree down a bit here. Let's see. Let me get this kind of positioned how I want it. And if a real bearish scenario is going to take place, this is kind of how it would look like. So you have that initial 1, 2. So 5 down, 3 up. Another 5 down. Now, there hasn't been enough action to really analyze, but assuming we get another 5 down, 3 up, and we don't take out this high, which is at 44.6540, this potentially just could be the initial legs of the third wave, that larger third wave, and then we get the 4 and the 5. Now these aren't projections, these are just kind of eyeballing placeholders. So if we get something more like this, for maybe you know, 5 down for a larger wave A or a larger wave 1 or something, that would be a lot more bearish, okay, and would suggest a much more significant correction or crash or whatever you want to call it. So this is still potentially alive and well as long as we don't take out 44.65. Also, it starts gaining some traction here if we fail pretty soon on this bounce and get back below 42.88.52, okay? But those are some hypotheticals at the moment. We haven't done that yet. Right now we're just kind of stuck in the middle here, and really not much to do. I personally closed some you know, short ES there last week on this move down. Now I'm in a more neutral point. I have a few calls, nothing crazy at this point. And I'm just kind of waiting to see a little more pattern development before I decide on the next move. So I just wanted to show the couple scenarios I'm following. I'm currently leaning towards the more bullish one, where we just did an ABC down for a wave 4, and we're gonna, you know, head up here maybe towards the end of the year, which seasonally is also quite common to do. Have that rally towards the end of the year after you have your fall volatility. Seen that many times before. But definitely can't ignore this. If we actually materialize this sequence, then we have to start getting a lot more bearish. But I'm just not ready to go there quite yet. And let's go why I kind of favor the more bullish scenario too. I think I've shown enough here on the wave analysis. So if we go to the thinkorswim candlestick chart, what I actually want to quickly go to before I do my normal candlestick routine here is the Vixx VVIX tool, and also Vixx itself. So even though we made a lower low here on SPX than that prior low, so the prior low was 43.05, we made a new lower low at 42.88, there just wasn't any power to it, right? And you can see that both Vixx and VVIX made significantly lower highs, even though SPX made a lower low. So that is a bullish divergence there. And even here, you see, just on this shorter time frame, VIX kind of did a divergence here between VVIX from this reference point. You can see VVIX made a significantly lower high. VIX kind of made a double top here, and now VVIX got below the red moving average. SPX touched the blue moving average, hasn't gotten above it yet, but that could easily happen, you know, early this coming week. So this suggests to me that maybe that ABC down scenario is the more likely one, and we're about to start another move up here, just based on this tool alone. Subject to change, of course. Again, if we can hold below that area and get and start making new lows again, things will start getting a lot more bearish. But that's only if it happens, right? So far, this is what we have to deal with. Okay, so I've already done what I want to do there with the Vixx VVIX tool, just kind of show what I'm thinking there. Now back to the daily SPX candlestick. So we had a reversal day, but it wasn't that meaningful on Friday. We're still below the T line, and in fact we rejected off the T line there. So as long as we keep staying below the T line, the trend remains, you know, pressuring downward there. We're still well below the 50-day simple moving average. The 20 days crossing below the 50, so maybe like a miniature death cross. The real death cross is the 50 going below the 200. But there's nothing here yet to suggest that we've got some big reversal and rally to come, although, as I've laid out with the potential wave count, that may be what we're about to do. But just needs a little more confirmation, right? If we have another strong up day on Monday, okay, then we have to start really entertaining the more bullish scenario with a more serious emphasis on it. Kind of just in no man's land right here, though. Yeah, okay, we made a lower low. Wasn't powerful, though. Didn't get a nice breakdown. And we reversed, and now we're just kind of in the middle. Not much to remark on there. Oh, one thing I will mention before I go to the weekly candle, if we go to the monthly, there was a, you know, important monthly reversal, for what it's worth. And we did a monthly bearish engulfing candlestick. So the September 2021 candle fully engulfed the August 2021 candle and closed below the prior month's low, okay? Not just closed below the prior month's real body for the bearish engulfing, but also just outright closed below that prior month's low. Now, we haven't done that since I believe the the crash we had starting in basically February 2020, right? February 2020, that was the first month. The first month in several months at that point that had closed below a prior month's low, and then we got that big whoosh down in March of 2020. So ever since that March 2020 low, we haven't closed below the prior month. Okay, we've spiked below it, but you can see we haven't actually closed below a prior month's low until now. So that is worth noting, although I don't put that much emphasis on it until we actually start getting some confirmation and breakdown here. Okay, so that's what I wanted to point out on the monthly candle. And on the weekly, anything there? Not really. Not any clear message on the weekly, in my opinion. Okay, so that's SPX. We'll go over to the NASDAQ composite. Or sorry, the Dow Jones first, I guess. And the Dow, also another thing, the Dow isn't breaking down in the same way, at least last week, as the NASDAQ and the SPX. We didn't make a new low below this low, which was at 33,613. Made a higher low. So you could argue from the top here, just A, B, C down, maybe starting at 1, 2, 3, 4, 5. Maybe we're starting the next impulse wave up more obviously here already on the Dow. It's certainly possible. Although, need some confirmation because we're still below the T line. But to me, things are starting to kind of shape up for a more bullish move unless we really get going to the downside right away here. Weekly candle on the Dow. Anything worth mentioning there? Not really. I haven't looked at the monthly candle on the Dow, so I'm not sure what's there to note, if anything. Yeah, the Dow also did a monthly bearish engulfing, and it actually engulfed 1, 2, 3. Oh, it looks like maybe 4 prior months. So that's a pretty powerful monthly reversal candle, just viewed in isolation. But again, doesn't mean much unless we actually start getting lower lows and breaking down here. But worth noting, significant monthly bearish engulfing candle on the Dow. Weekly candle, not much. No, not much to see there. I think I might have already looked at that. Okay, so that's the Dow. Actually, we're not very far away from that 200-day moving average either on the Dow. Much closer to it, I think, than on the other indices. Doesn't mean we have to touch it, though. Let's see. NASDAQ composite. So it kind of looks similar to SPX. So far, we just got 3 waves down, ABC. Looks like maybe a bit of a bullish hammer reversal there on the daily on Friday. So yeah, I would just kind of revert to the S&P. Basically looks the same. Not much else to say there. I won't bother looking at the weekly or the monthly. Okay, so that's the NASDAQ. VIX. So again, VIX just not showing any power. If we were really breaking down in some sort of larger decline, you'd want to see VIX just surging, and we just haven't done that. And in fact, we did a big reversal candle on Friday on VIX. Again, I don't put that much emphasis on VIX candlesticks, but technically a bearish engulfing candlestick on the VIX on Friday, which would make you lean more bullish on the indices, right? Subject to change, of course. Things can break down very quickly, and this can start looking a whole lot more, fast moving to the upside. But as it currently stands, not seeing it. Okay, and that's probably all I wanted to go through. I think I went through the Vixx VVIX tool, which kind of has us leaning more towards the bullish scenario, at least for now. So it should be an interesting week this coming week. Do we get some continuation and kind of reassert that larger uptrend, or do we fail below the critical levels there and actually start breaking down into something more bearish? Could be an interesting week, certainly an interesting month coming up here, and we'll just have to see what happens. All right, Serial Trader signing off.